Hey, good evening, everybody. This is Dennis Wilburn with the Active Trend Traders. I want to welcome everybody to the Art and Science of Active Trend Trading update. It's a weekly review we do just to see if there's any potential, to see what's going on with the market, see if there's any potential bonus setups we have up for our regular members. I want to remind everybody that all materials presented are for training purposes only. Traders should always pay for trade any new method prior to the risk of their own personal capital. Remember, our objective at active trend trading is to clarify, simplify, so that everybody can multiply their trading accounts and also their knowledge of how to trade stocks, options, and ETFs. The Art and Science of Active Trend Trading update basically is a weekly update video that accompanies or goes into my newsletter. Market technicals is what we talk about. I look at potential bonus setups and other market driving events. Take a look at, and I also then provide a tech or mechanical tip to help people become better traders. Today's update, earnings still going on, but they're kind of starting to slow down. And of course, this is not the week of August 12th. Sorry for not, this is the week of September 9th. Earnings setup, bonus setups. The big thing on today's review, I just want to take a look at this technical tip. Why chase? I run into a lot of traders, and they've got watch lists that are huge. I mean, 50, 60, 70 entities on their watch list or more. They spend a lot of time on the weekend looking for that stock that just happens to be, at a buy or sell point. And so now there's not a, I'm not criticizing, but what I'm saying is if you're looking for winners, I believe personally that the ETFs in various sectors and also for the indexes provide us the winners that we're looking for. We don't have to, we can enjoy our weekends rather than digging in, finding, a stock that may or may not be setting up. So the question I'm posing is, why chase when you can wait for the winners? Or, to restate it, how using a select group of leveraged ETFs can provide big winners every year. And that's what we provide for our premium members of the active trend trading system, is basically 3 index ETFs and 4 ETFs that cover various sectors, 2 commodity sectors and 2 business sectors, biotech, financials, and then we also cover gold and oil. So how does that work? Okay, exactly. And basically I'm going to cover that right now, and then we'll take a look at a couple of stocks. Here's LABU. LABU is the leveraged ETF for the biotechs. And this is what I'm talking about, is that basically, as you can see, this is a weekly chart. And the biotechs have basically started, and this is just 2 years worth of data, October 2016 through just about October 2018. So 2 years worth of data. Well, what kind of runs did LABU, the leverage index, leverage ETF for the biotechs, provide us during this time frame? Well, going back here and just taking this basic potential moves. Now, I'm not saying that we would capture every bit of these moves, but these moves are large enough, so even if you cut out the middle and just picked up the middle of the move, be very, very interesting. Of course, with the active trend trading, we're looking to buy based on some proprietary triggers towards the low end of the range and sell towards the high end of the range. So what was provided? What did LABU provide during these last 2 years? Well, here's the first run that started back about the first part of January 2017. Ran 79% in 9 weeks. Then a little bit later, same year, 84% 9 weeks. And you'll see this 9 weeks thing is a little bit of a recurring event. 66% 7 weeks. And then, okay, those 3 moves were just in. Those 3 moves were just in the month or the year of 2017. Then we get into a little bit of 2018, 89%, 9 weeks. 65%, this is the second move we had, 65%, 8 weeks. Now, I missed a little one right here, and that's okay, but just give us an idea. And I intended just to give us an idea of what was the potential of this. Well, by waiting for the winners, we had 5 runs in 2 years. The average run was 76%. Again, I'll reiterate, I'm not looking at capturing all of that run, but I want to be focused on just a few and wait for those few to give us the setup. And every one of the ETFs that the active trend trading follows provides similar type results. And so I know that folks look for, capturing, 20, 30. Well, if a person captures 20% for the year, they think they've had a really bang up year. Well, how about if we could capture more like in excess of 20, 30, 40, 50, or more percent per year? And by focusing on these few that have demonstrated basically the tendency to do this year after year after year, could that make your life easier? I know it'll make my life easier. So that's what we're going to be focused on really hard through the end of the year and into 2019 with the Active Trend Trader Premium Service. Taking a real quick look at the composite list. And the composite list is basically I take all 13 IBD watch lists and I combine them to see which of those stocks show up on the most list, with the premise there being if it shows up on a large number of lists, it is probably in good shape. I did a review on all these. Team is the stock of interest going into this week, and I will basically throw that out and I'll review that particular chart for us before we move forward. Let's see here. And then one of my for the entities that we do, I do follow on all of our entities. What kind of seasonality do they show? And we see on crude oil. Crude oil basically tends to go into the September-October frame. The labor year driving time is over, and it goes into a drop through the end of the year. We'll see if that happens in 2018. Because if that is the case, we would expect some downside on oil to push into the end of the year. Secondly, Russell Index. I'm also, and I'll share this just straight up with everybody. Yeah, I won't give you the triggers, but I'm looking for this big pullback in the September timeframe, so I hit October lows and then go on to a rally with Russell. And now Russell, what are we going to trade if we do get this in Russell? Well, IWM. You can buy calls. You can sell puts on IWM to ride it to the upside here. And so we're waiting for the reversal signals that happened during that time frame. Right now they're not showing, but we are starting to get a nice pullback in the IWM. Last time. Okay. So that concludes the presentation. Let's take a look at those charts I was talking about. Oops, go back. There we go. Okay. And that was TAM. Team. Team has been on a tear. Excuse the vernacular there. Weekly chart. Every time it's pulled back to either the 8-week or the 20-week, it is rebounded. What's it in the process of doing? Well, right now it is extended away from those two areas. However, on a daily chart, it is pulling back nicely into the 20, and we'll see if it pulls back into strong support at the 80. And if it did that, what moving average would it be next to? The 8-week moving average, which corresponds approximately to about the 50-day moving average. So that's what I'm waiting for on team. Not ready to buy it right now. However, we're getting a nice pullback. It may hammer out its low or its base right here. Like to see it get a little bit closer to 80, because from 80 up to its current highs, we'd be looking at, it's about a 15% gain. And that's what we'd be looking at. I will take a look at, okay, the last, there we go. As I said, I'm looking at gold. Gold is in the process of basing. Gold may have slid its seasonality further to the right. Right now, gold is in a downtrend. We did not get our regular seasonality run on gold. We got a little bit of an uptick, but that's it. I mean, from here in, it moved up approximately, 3.35% in the August timeframe. You tend to usually expect about 10% in gold. And what goes with that JNUG? Again, JNUG also in September had a little nice move, about 27%, but really sloppy and choppy. Not really a good reversal signal. And so that's what we've got going on JNUG. And then I will basically do some of the other stocks that I'm looking for. And I'll throw this out. You may follow Tesla. Oops, can't find that one. How about TS? There we go. As you see, hey, Tesla, if we drop below this 242 level, guys, Tesla's probably going to drop to 200 at 180. And I'll leave that with you moving forward down to that level. And as we know, Elon Musk is acting like a crazy man right now. And and he is really driving the stock prices dramatically. SPY, take a real quick look at Spider. Spider has gone, the S&P has gone into a little flag pattern. I would like to see it basically maintain that flag pattern all the way into October, because guess where? I've got support down here at 280-ish, 279-ish, and that's what I would anticipate the seasonal bounce to take us into the holiday season. QQQ, something similar. It did basically real nice sell-off. See if we'll drop down here. Where's a good level I would like to see? If they could drop down to about the 177 level between now and the first part to the mid part of October, that would be great. Can it drop lower than that? Sure. Somewhere between 170 and 177, idea area for the Qs to drop to. Will I trade against the current trend? No. I'm going to wait for my setups and just trade in the direction of the longer term trend. Same thing with IWM. You can project the low to high, put a little trend line there. It looks like it may go into a more significant pullback, but where might it pull back into? Well, you already found support at 169, 168, 166. Look for that to be the reversal area sometime over here, time-wise, over here in the October timeframe. So that's what I've got going on for the entities. That should give you a couple of trading ideas. I hope you have a really great rest of the week, folks. And I'll just, and if I didn't mention it, I'll be in, well, I think I did mention it, but I'll be presenting in Sunnyvale at the Silicon Valley Option Group on Thursday night. That's coming Thursday night, 6 o'clock. That's out at the Elks Club, I believe. You can look at their website on Silicon Valley Option Group. And then next Saturday, 1:30 in the afternoon, will be our regular Bay Area Moneymaker meeting at the Masonic in San Jose, the San Jose Masonic, 1:30 in the afternoon. So I look forward to seeing any of you who are in the Bay Area. Come on out, say hi. We're going to have some great trades to take a look at, and also talk about seasonality for the entities going into the end of the year. So with that, I'll say aloha, God bless, and I hope to see some of you this weekend.